The U.S. Fed starts a two-day meeting. That's tomorrow. Our next guest says the Fed might not do or say much, but the markets could be on edge for any word about interest rates and economic growth. For a perspective from the trading floor, we're joined now by Charles Moon, senior equity trader at Trading Advantage. He's in Chicago. Charles, before I get to the Fed, I just want to talk about all the things that are moving this morning, if we can. Oil's up a bit. Gold's up a bit. The VIX is up 3%, but I would call that a bit. Markets are down a bit. It seems that everybody's taking all of this action around the world in stride. What is your thought?
Yeah, in stride is the best way to describe it. Until we see a ton of volume. Last week was a great example of this. The first half. Actually, the first three trading days of the week, and even prior to that, it's been pretty light. And we saw a little bit of a squeeze as far as buyers on Thursday. We saw more so on Friday before they rebound and started taking some profit. Volume really hasn't made much of an appearance. It's almost like the summer trading's here a little bit early. So we're not seeing true reflections as far as movement goes in stocks in correlation with the markets. With commodities, I'm not surprised to see gold making a little bit of a move. Definitely not surprised to see crude making a move. It seems like they're cycling out of stocks into commodities at the moment right now.
Would you have thought, though, that they would have been bigger moves?
I'm sorry?
Would you have thought that they would have been bigger moves?
Well, crude has made a pretty decent move.
Last week.
I guess that they're kind of in a wait-and-see pattern, so to speak. And again, until there's a lot of volume really coming in to push the markets overall in either direction, the moves itself are generally going to be light. Now, crude, I still think it's going to spike. It's probably going to spike as escalations increase even more. We'll see what happens in Ukraine with nat gas. Gold, not so much. Gold's been somewhat sideways here over the last few months, really bouncing back and forth in a range. But again, we could start seeing the cycle coming from stocks into gold. The markets have achieved these highs, and stocks really haven't been reciprocating as much.
All right. Charles, let's talk about the Fed. You wouldn't be surprised to see nothing, but you also wouldn't be surprised to see them lower their economic growth forecast. We're hearing from the IMF this morning. They did just that, and they are suggesting that the Fed may have the scope to keep rates lower for longer through June 2015, where I think the consensus is now. What are your thoughts on the Fed in the next 2 days?
Yeah, I think that it's almost expected that they have to drop the GDP rate for 2014. I mean, it was a negative report. It was such a bad miss, so to speak. And, of course, you're going to blame it on the weather, but they can't lean on this crutch anymore. And, of course, if expectations are that they have a certain level to reach as far as growth goes, and we falter and fail miserably, so to speak, the markets could react violently, even if it's in summertime trading. So, to kind of tease that off, so to speak, they're going to have to lower their growth rates. And as far as the interest rates go, it's been widely speculated 2015, even 2016. You're right about the consensus. I don't see any change in that projection.
Let's talk about, we've got a number of companies reporting earnings. It's a bit of an off-cycle period, but there are a lot of big names, including, we'll kick off Adobe. Been a pretty good performer this year, up 11.5%. Do you think that performance will continue?
And again, my belief is that if they come close, even if they miss on their expectations, there's still going to be buyers trying to get in on a value play, buying the dip, so to speak. And then, of course, if they beat, it could really start making a push. Been fairly bullish, especially when the market was going down. They were able to withstand that. I'm a big fan of Adobe. We'll see what they have as far as forward projection goes and guidance. That's always going to be key with any type of reports. But if it's somewhat in line with expectations, as long as it's not a bad miss, I still like the upside on Adobe.
One of the stocks that has not performed so well this year is FedEx. It had a pretty good 2013, so valuation maybe, or the stock catching up with valuation, but it's down a couple of percentage points, economically sensitive, of course. What do you think is going to come out of this company, and what do you do with the stock here?
Well, that's kind of difficult. With FedEx, to me, why they're at these price points is due to their huge buyback that they announced. It just absolutely lifted the stock price up, and it helped progress it up to these price levels. You have to worry about what the weather's done. You have to worry about the effects on the bottom line. They operate on such a thin margin as is. And then, of course, with the projected rise in fuel costs and crude prices, could really weigh on them pretty aggressively. If they miss I expect them to get hit pretty hard. And even if they don't miss, there could be a stance by sellers saying, well, in the future, I can't expect that this company is going to make profit, especially if fuel prices hold at these levels, because we don't know how long this this uprising, this tension in the Middle East is going to last. You know, this could really go on for a long time, and these price points could stay up here, if not even more elevated. So this could really weigh down on FedEx as far as long-term growth. I really like the downside of FedEx.
The winners this year, Oracle, Cisco, twice the market's performance, Intel 3 times, Hewlett-Packard 5 times, a little bit more than 5 times the market so far this year. Are you sticking with old tech?
Yeah, and I'm a fan. We spoke on this a while ago. It seems like, institutional traders are rushing back to these old school companies. Look at what SanDisk has done over the last month. They've been on an absolute rush. And of course, Cisco, Intel, HPQ, all making this jump here in the last 3 months. If Oracle could really come close to their numbers, and especially if they beat, that's a big thing. If they beat, we could see a nice jump from them also. It just seems like the big money really likes these old tech companies. It's going to be dependent on their forward growth and their EPS, but if it's positive, I absolutely love the upside on Oracle.
Charles, thanks for joining us. Have a good week.
Thank you for having me, Francis. You too.
Charles Moon, Senior Equity Trader at Trading Advantage. He was in Chicago.